What's going on, everybody? Going to be making a quick little video on basically liquidity. It's going to be the first series of the bootcamp for the Discord. This will be added into the video library. So we're going to kind of break down this little diagram and then obviously go into some charts. So what is liquidity and why do we refer to it? It's basically our way of saying where the market is headed towards, right? Where is it likely to go? What is our target, right? In a bear scenario, bullish scenario. If we're looking for liquidity that is lower, right, we say sell side. If it's higher, right, above highs, we're looking for buy side liquidity. So liquidity could be doing two things. It could either be targeting highs or lows, right, of candles, or it's going to target imbalances, right? This is obviously going to be referred to as, BPRs, fair value gaps, volume imbalances, right? We are going to get into the imbalances part in the next one. But for right now, we're going to focus on just simple market structure and basically just targeting highs and lows, right? So let's say we have some significant area of liquidity here. Basically some form of a low here that was put in previously, right? Let's just say structure was kind of like, right? We have a low here that was put in, right? And this was the lowest moment at that point in time, right? This low here, drag this out, right? So market's kind of doing its thing. Maybe it sweeps an area up here, right? Gets some displacement down out of that area, right? And starts building structure, right? So in here, we have some form of imbalance, right? Maybe we violated some kind of PDA right here, right? We're tapping back in this BPR and we are respecting this area. Maybe we don't have such a heavy displacement like that, right? But you could see we come back and we are kind of accumulating here. Now, I basically zoomed in on this example here and kind of got it more detailed than just some simple swing high or swing low, because I want to talk to you guys about internal liquidity, right? So you guys could see we have a small range here, right? Basically these highs stacking, these lows stacking. What ends up happening is in this kind of continuation sequence, right, we come and end up sweeping that internal high that we made, right? This internal range. And we deliver from this internal range into external ranges. So, like I said before, liquidity is going from either internal range into external range or external back into internal, right? That's why some of the trades that we take are obviously going to be internal into external, right? But there's some scenarios that sometimes we can get a trade based off of, the external back into the range, right? Into the internal liquidity, such as the imbalances that we created. So, right, a trade that we would take, right, typically is something within here where we kind of get some kind of confirmation sequence. Obviously, when we get there, to take our continuation lower, obviously to stop at the high, maybe let's just say, right, or even something within here, right, if we get some kind of confirmation sequence that we can look for in this retracement, then we would look to shoot down into this liquidity area. So, right, you can see here, liquidity swept. The most important thing that we're looking for out of areas of liquidity is speed and displacement, right? If there's no reaction out of that area, you can't anticipate a draw higher to get met, let's just say in this scenario, right? So you can see we kind of, sweep this low originally, initially, I should say, right? We get some small retracement back, we make another move lower, right? And then we start to get some speed and displacement above this high, right? Maybe we create some gaps, we kind of sweep this internal low, right? Internal range that we create. And then we start to, form some kind of SMT possibly at lows, which we'll also talk about, eventually in probably video 3. And then we get more speed and displacement. We get some kind of continuation model, maybe, right? This is what we look for. Maybe we get some, consolidation here, sweep the internal, and then we get our delivery into, this internal range high here, right? This internal high here, and then eventually into this external high here is what we'd be seeking. Right, so this is kind of just the basics of kind of just structure and liquidity in general. Now, as a trader, what it's important to kind of always reference is, I basically say it like this. It's like an if-then statement, right? If these PD arrays get respected, then I'm going to anticipate the draw to be lower. If they get violated, then I'm going to anticipate the draw to be higher. Now, for example, let's say we make a bearish gap here. Let's just say we sweep this internal low, right? Let's erase this half here for now. Obviously, I'll get into some charts as well, but let's just kind of build out a scenario. So let's say we put an internal high here. We start to get a move down, right? And we create some kind of, let me make this a little bit more. There we go. Right, let's say we come and, again, we're still holding bullish structure, technically, right? Until we see something that we need to see within here and really have conviction in this low. But let's say we kind of sweep this internal low and we get a move higher, right? And we violate this, let's say, 5-minute gap that we created. Well, at that point, right, we can see structures holding. We can look for some kind of validation to, or confirmation setup to possibly anticipate, obviously, this internal high here first, and then the external draw up here, right? Basically using those PD arrays, to kind of help us pick the direction and determine the draw. Because at the end of the day, price is either up or down, right? And what we're using is those PD arrays to kind of give us a conviction in where we want to see the market head towards in that time window, I should say. So that pretty much sums it up for that. Let's kind of take a higher time frame kind of area. Let's see if we could break this down. So we're at all-time highs in early November here, as you guys remember, right? And you can see we're kind of chopping and then we get a move down. Now, what do we create? When we get into the next video, obviously we'll go into more detail, right? But we can see this gap. We'll just refer to them as gaps. You can see here that we did not actually fill this new week opening gap, which we'll also get into, which is basically Sunday's 6 p.m. close, and then, Friday's 6 p.m. or 5 p.m. close into Sunday's 6 p.m. open, is what I should say. So Friday 5 p.m. close, and then 6 p.m. open on Sunday. We have a gap here in the opening price for the futures market, right? We can see here, price initially kind of hold this area, right? And if we were going to act as support in this area, I would want to see these gaps get violated in order to see higher prices, right? Specifically, maybe these internal highs here, these relative equal highs, right? That's a nice price magnet. Now, if we see these gaps get respected, right, then I would want to see this new week opening gap get filled and then see a move lower, right, for a continuation. So let's kind of see how this plays out, right? This is, okay, there we go, right? We get a nice reaction out of that 4-hour gap. Now, within here, we would look for some kind of possible, let's see if we could break this down maybe to a lower time frame. There we go, right? It's 9:30. So we have a 9:30 opening move up, right, into that 4-hour gap, right? We could see this gap get violated here, pretty much, right? We could see a very strong close through. We would anticipate this new week opening gap fill to get completely to the bottom, right, with that structure, right? Because we're still respecting that bear structure. And as you can see, there it is, right? That was our draw on liquidity using that 4-hour gap reaction. Now, you guys might be like, oh, well, how do we enter this trade? So and so, right? We're not there yet. This is just using the structure and the liquidity to identify some kind of framework in order to then further develop some kind of trade idea, based in this area, right? Or even somewhere within here, right? Because at the end of the day, we're anticipating this draw on liquidity down here to get met. So let's go ahead and go back to the 4-hour, right? Now that that draw is taken, I would then anticipate, hey, either we get some kind of retracement or we could obviously seek lower, right? There we go. We get some kind of retracement. We also put in a new fresh 4-hour gap. Now, let's open up ES as well. And let's look at this. So we did actually end up sweeping the high on ES, right? So this internal range of liquidity was technically taken. Wait, no, this is all the way. Oops. That's why I was confused. I was like, what? All right. So we can see ES has this low as well. There we go, right? We get our retracement. We can see we sweep this high here on ES and we do not on NQ. This is going to be referred to as SMT, meaning we made a higher high on ES here while we did not on NQ, right? Which is our divergence. And we are left with a gap, a little small gap here. Now, thing to note is we swept internal. We're still in these 4-hour gaps. There's no reason to look upside just yet, right? We haven't invalidated those gaps. We haven't got a good close over, these highs on NQ. There's no reason to look up just yet, right? Unless we start to continue from here. Now, you can see here, we get a nice displacing candle, right? Through this 4-hour gap. Now, we violated this bullish gap, showing us that the draw is lower. So going into this 10 a.m., right, we got the close at, what, 9:59, I'm going to assume, right, that time. Through that gap, like 9:45, 10 o'clock-ish, right before that 4-hour candle open, right, opened up here, and we're anticipating lower prices into that draw. ES looks a little bit weaker, which looks like we're closer, right? We look some trade idea. There's liquidity being swept, right? Very nice. Very simple low here getting taken. We do have more lows here, right? But the thing is, what we have to understand is this. We have to pay attention to the reactions out of this area. If we're getting speed and displacement upside, I can't anticipate this draw here, right? I would favor some kind of back into the range move, right? Which, as you're seeing here, rather than a move lower if we're getting a reaction out of that area, right? So let's kind of see how structure kind of builds, right? You can see here, we get a violation of this 4-hour gap, right? We kind of get a retracement and kind of respect this towards that 10 a.m., right? At this point, you can anticipate, this internal high to get met. You can anticipate these highs that are likely to get met. This is at 6 p.m. Keep in mind, ES did reclaim its high, right? So at this point, we had an initial SMT that dropped this move. I would anticipate higher prices, but we did sweep this internal high. We did get a move higher in ES, right? But NQ is still failing to close above these highs, right? So all-time highs on NQ is kind of not in play, right? It looks good on ES, but it's not ready on NQ, right? And that's why it is important to seek correlation in both indices, especially with liquidity. All right, there you go. You get a 4-hour gap created, right? We have some internal lows created. You can see here we delivered into these internal lows, right? At this point, right, looking from a structure standpoint and how heavy we kind of, displaced out of that range, right? We then can anticipate this previous day low that we created, right? And then lower, right? We can see retracement. Actually, we ended up sweeping this, right? We did not sweep this on ES, and we came back into a 4-hour gap, right? And then once again, still respecting the 4-hour gap as you guys pay attention to the closes here, right? And the closes here on ES as well, right? We generated more liquidity, and we are looking to seek these relative equal lows. There we go, right? And those are taken. ES did not actually take them. Right, so once again, from here, we don't have to take this low. Obviously, this was the nice shiny low that we wanted, right? But it doesn't have to take it at that given time, right? So if price is displacing back up, right, which still not really getting a displacement, right? We got to move back up, I believe, with NVIDIA earnings this was, and then we completely pulled the rug at 10 a.m., right, into this area of liquidity, which, like, once again, right, still respecting this upper 4-hour gap, never closed above, so there was no reason to really look, for highs to kind of deliver. Then once again, right, we're created with a big gap, but now we swept a very significant area of liquidity, right? Keep in mind that we have all these highs stacked, which we're going to refer to as LR, basically, right? These stacked highs, especially on ES, a little bit better, right? All these internal highs are liquidity, right? Liquidity up here, right? After sweeping all the sell side, I'd want to anticipate a move back up, right? But if we hold this 4-hour gap, it's going to be very hard for me, if we displace lower, it's going to be very hard for me to look, long bias just yet, right? And that's why coming into this week, I was more long bias, seeing that we were kind of respecting these new 4-hour gaps created, right? Anticipating this level to get met, right? And that's what happened. right? And then obviously ES has still more room to go. And that's it for now, obviously, into where we are today. But I am still anticipating higher prices. I want to see this ES high get met. I mean, we could see some kind of possible retracement. First, we've been very aggressive, so I want to see if we can come get this daily gap fill and see how we kind of react to there. And that's really it. All right, so that'll be it for liquidity video 1. I will catch you guys in the next video. We're going to cover fair value gaps and kind of imbalances, BPRs, and basically go through that. So I will catch you guys in the next one.